Folks, in this video, we're going to talk about divergence, and more divergence, and how right now it's showing that the market is very, very, very close to bottoming out. Now, before I begin, I want to explain to you what divergence is. Now, we're going to be looking at three different indexes. We're going to be looking at the semiconductor index, the QQQs, which is the top NASDAQ stocks, and the Dow Jones. Now, as you could see here, on every one of these examples, you could see how price action is getting lower. But notice the RSI levels. The RSI levels, and this is just a standard 10-day RSI. I don't use the 14, I use the 10 for stocks. But as you can see here, the RSI level is getting higher and higher, not lower and lower. What's interesting is when the Dow Jones, or in this case, it's the Dow Jones. When the Dow Jones was at 33,100, I'm looking at the Diamond, which is the DIA, which is the ETF that tracks the Dow. So I have to add a zero to everything I say. So when the Dow Jones was at 33,100, the RSI went all the way down to 22. When the Dow Jones was all the way at 310, the RSI is barely at 30. Now, that's very significant, and look at how long this divergence has lasted for. And typically, when you see this divergence, it's actually a lot more powerful than the indicator on its own. And while the RSI, the Relative Strength Index, is a very, very powerful and very popular indicator, and one of the reasons why it's such a popular and very powerful indicator is because it's slow to move. It's not very sensitive to price action. So if you were to go back in time, for example, if we were to go back 3 years, you would see that the RSI on a weekly basis, the last time it signaled was when we had COVID. Look at that. And guess what's happening right now? Again, we're starting to get a signal. Same thing with the QQQs. If you look at the long-term chart, you will see that the last time we went to the oversold RSI level on a weekly basis was during COVID. And again, it's happening again. And not only are we seeing the divergence on a daily chart, but we're also seeing it on a weekly chart. Look at how slopey this is. We're not seeing that here. So and on a daily chart, it's crazy. It's really, really bad. I mean, look at this. It's been going on since the beginning of the year. So when you take this into account, when you see this long-term divergence, what it usually tells us is that the markets are going to bounce back pretty hard. It doesn't tell us the markets are going to turn around, but it does tell us that a bounce is going to happen. And the longer the divergence lasts, the better the bounce will be. Now, in this case, we've been diverging for a long time. On the NASDAQ, it's been since January 24th. On the Dow, it's, let me go to a daily chart. It's been since January 24th. And on the Philadelphia index, on the semiconductor index, it was just 4 days later. So February, March, and April, for over 3 months, we have been diverging. The RSI can't catch up with this. And when you take that into account with the current momentum levels, and I'll show you what I mean. When you take that into account with the fact that there's only 13 stocks in the NASDAQ 100 that are trading above the 200-day moving average, what it tells me is that the market is very, very close to bottoming. Matter of fact, if you look at the RSI, look at how many times in the last 20 years the RSI went to these levels. It doesn't happen very often. So when everybody's really talking about a crash, I'm actually looking for a bounce higher. But only 3 times the RSI went to these levels. One time was 2011, one time was obviously 2008, and right now. And the momentum levels are also showing the same. Matter of fact, we're lower right now than we were any other time than 2008. So I'm actually expecting a big bounce up. And most importantly, these divergence areas, they happen all the time. They'll happen to the upside when the stock market is going higher, right? And the RSI starts going lower. And the same thing when the price goes lower and momentum levels are going higher. It's a very, very classic sign that the market is had it. Now, does that mean we know exactly when it's going to happen? Does that mean we know the day of the reversal? No. But what it does tell us is that we're getting very, very close to these bottom levels. And another major factor, and I've been saying this since day one, if you look very closely at my stock fetcher, and if you look at my filters, and this is a biggie, the filter that's been lagging behind the entire market for the last 5 months, communication services, is no longer lagging. And the Russell 2000, which is the small caps, which has been lagging behind this entire time, notice up 1%. Look at the SPY, up only 0.22 or 0.14. The point is, small caps are starting to lead. Communication services is not in the gutter anymore. On a monthly basis, it's even above real estate and consumer discretionary, and we're having massive divergence. Now, before I let you go, there's one key factor that leads me to believe that the worst in the stock market might finally be behind us. That's right. But you know what's funny? I've never heard anyone on Wall Street talk about this key factor that I found. No one. So this past week, I opened up my VIP room for everyone for a complimentary open house. Inside, I gave away cold, hard data, real data of why I feel so bullish about the market right now. And I'm not a constant perma bull. That's not what this is about. I'm actually a lot more bearish than most of the time. But this is why I believe sectors are falling back in line. And this is a real big clue. Click on the link below. Learn how you can join. It's going to be fun. It's interesting. Join the fun. It's exciting. Try to pick a bottom. What if I actually can come close to picking a bottom? Wouldn't it be pretty cool? I think so. Make sure to follow the link below. And if you're watching this on YouTube, go to the YouTube Wealth Press channel. Follow the link there. Make sure to like this video. Subscribe to this channel if you're watching on YouTube. Stay ahead of this crazy market. Be the first to be notified when I post my next video. And have a great day. Comments, feedback, love letters, support at marketgeeks.com. Bye, guys.